Now, speaking of stocks, should you try to pick individual stocks?
Absolutely freaking not.
Really?
Absolutely. Even though I started by buying my first stock in McDonald's at age 7, and I bought my second stock at 9 in Disney, and I have them in these portfolios of ETFs, exchange traded mutual funds, because that's the best way to invest. Doesn't take time, low cost, tax efficient, and you won't screw it up. The greatest myth for young people is that that's the time to be aggressive with your money and take risk. Let me explain what I mean when I say this, okay? Because this is where I think people get led astray. Because people say all the time, when you're young is when you should take the risk. They're buying meme stocks. They're buying meme coins. They're looking for the NFT. They're seeing all this garbage on social media that they're hoping to get this huge return on, and then they lose everything. And then they stop investing. Whereas if they had just invested in an index fund, they'd have something to show for it. When we've done surveys and we have asked people how much money would change your life, the number one answer has been $10,000, which is fascinating.
So $10,000 buys freedom from a job or a relationship.
For many people buys freedom. Now, here's the really interesting question.
Okay.
How much money does it take to blow $10,000 in a year a day?
Yes.
It's $27.40 a day.
$27.40 a day is $10,000.
If you invest $27.40 a day, this explains compound interest. If you invest $27.40 a day and you're in your 20s and you do this for 40 years at a 10% rate of return, which is what the stock market has averaged for 100 years, you use that fund, you'd have $4,424,000.
Say that again?
If you invested $27.40 a day, which comes out to $10,000 a year, in 40 years, you'd have $4,424,000. That's a fortune.